Let's look at the whole premise that Wall Street uses to attract you and your money. Whether it's a mutual fund, a broker, financial advisor, they're all trying to get you to believe that if you use their services, you will beat the market. Well, have you ever thought about what beat the market means? Let's think about it. First, you got to think about what market are we talking about. There are many markets in the world, and there's many markets in the US. There's the S&P 500. Those are the 500 largest stocks in America. There's small stocks in America. That's a different market. They're called the small cap stocks. So if you're going to beat the market, first you have to define the market. So let's assume that a broker tells you, or a mutual fund says, if you pay me money, I'm going to beat the market. Well, what's your alternative? Your alternative is you can buy something called an index fund, which allows you to own every stock in the S&P 500. And for a very, very small fee, usually less than 0.1%, you will participate in the ebb and flow of the S&P. If the S&P is up 12% one year, you'll probably be up about 12%. If it's down 12%, you'll be down. But you'll always imitate the S&P. The whole objective of a mutual fund or a broker is that they're going to take your money, usually 1 to 2% a year, and use your money to engage in expensive research and strategies to beat the market. But here's the dirty little secret. Almost no one beats the market. In fact, studies have shown that most every mutual fund over a 10 or 15-year period will underperform the market by both the price of their fees and then another 1%. That means that by engaging in expensive research and trying to beat the market, you're actually playing a fool's game. A great metaphor to this is when the greatest chess player in the world tried to beat a computer that was programmed by IBM. IBM memorized all the moves of the greatest chess players in the world and programmed it into a computer. And finally, this computer, Deep Blue, beat the world's best chess player. The stock markets are like computers, and the more smart people trying to beat it day in and day out, the more they all bid and get the prices of the stocks efficient. Think about hundreds of millions of IQ points being put on trying to figure out what's the right price for these stocks. Stocks are efficient, and the pros don't beat the market. So if you're continuing to try to beat the market, you're playing a fool's game. Your alternative is you can buy an index fund. And these are from many, many suppliers, but when you own an index fund, instead of trying to pick the right stocks in the S&P 500, you own all of them. That means you're guaranteed to do as well as the S&P. Not any better, not any worse.